Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Fantom and its native token FTM. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So what I'm showing you here on this graph in front of you is the price action, the price history of Fantom over time. And on the y-axis we have price in logarithmic form. Each dot corresponds to a day, and the color of the dot corresponds to the output of our risk indicator, the upside downside potential indicator, or UDPI for short. So the way that you can read the output of this model is that a score of 5 means high risk, and a score of -5 means low risk. So that this would be when the upside potential is greater than the downside potential. Here's where the downside potential is greater than the upside potential. And as you can see, over time, the UDPI has been pretty great at calling these bottoms, these low points, these low risk zones where historically acquiring Fantom at these points has been historically advantageous, as well as these high risk zones, these points where one would be doing well to be selling Fantom. So you can see that the model did a great job of calling this point here before the spring run as a great time to be acquiring Fantom before it put in this massive move to the upside, and then it called that top, which suggested that the upside potential was tapped out and that the asset was either going to correct or kind of move sideways for a while, and that's indeed what ended up happening until we went into that correction that we got in the spring. And then again, the model also identified, or excuse me, that correction we had in the summer. The model also identified the summer then as being a great time to be acquiring FTM. And then indeed we ended up going then into this big run into September where we put in this massive move to the upside. And something I think that we mentioned a lot, and I'll mention it here again, is that if you were around in the market during the summer, everyone was really fearful about the whole crypto space, Fantom included. Everyone thought the prices were going to fall a lot further. But really the model here was saying that wasn't likely. That just didn't seem to be the case. The data was suggesting this was actually a historically great time to be acquiring FTM, and then indeed, off to the races we went. Anyone who bought Fantom back here, down around 20 cents, is pretty happy with the outcome. Now that we've more than 10x'd that the value of the token since that point in time. So another thing that we can look at is, instead of just plotting the price action and color coding it, we can actually look at the raw output of the model and see what that's telling us. So as you can see, I have on the y-axis here the UDPI output, so 5 high risk, -5 low risk. And what you can see is that the UDPI really bottoms out at those historically advantageous times to buy. So for Fantom, it's been between this -4 and -5 range, and then really shooting up, spiking up at these high risk zones where the asset's likely to have to cool down for a little bit. So in the spring, that ended up happening, and then we had a short consolidation phase off of this run here, not a major correction, and now price has actually been increasing from here. And so one thing that's kind of a bullish sign for Fantom currently is that even though price has been increasing, the UDPI has actually been falling. So it's suggesting that the UDPI believes that even though the price of Fantom is increasing, there's still upside potential for it to be able to put in before it might be getting to these high risk zones where it's going to need to cool off again. So even though the model suggests that currently there's more downside potential than upside potential in Fantom, the fact that it thinks there's upside potential is good news, because we've been seeing this run to the upside with Fantom. This suggests that the model believes there's still more room to go before it's going to get really scary, before it's going to get really high risk. And so even though the risk reward potential or ratio overall might not be super favorable, the fact there's still room to move to the upside is a good thing, and it's a bullish sign that the model has for Fantom. So of course none of this is financial advice. Form your own opinions, form your own strategies, but that's what the model is suggesting. That's what its interpretation of what Fantom is doing at the moment is. So to talk a little bit more about where Fantom is right now, we can just look at the current level. And so Fantom sits right now at 1.13. And so the way you interpret that is that the model believes there's more downside potential in Fantom right now than upside potential. We're not down in these historically green zones where we're low risk. We're a little bit in the overheated zone, but we still have a lot of room to move to the upside. And so if Fantom is in the middle of putting in a new run where currently the price has been rallying quite well, what wouldn't be surprising is to see the price keep increasing, and then for the model to slowly then start ticking back into these higher ranges, and then potentially getting into these high risk zones once that move that Fantom's currently in the middle of maybe starts to get a bit unsustainable. Now, of course, there's no guarantee that Fantom has to keep running. You know, it could stop now. There's no guarantee that the UDPI has to get back to those high risk zones, so you can't be too deterministic about it. You can't assume the asset's going to get back to that point. But the way that you can interpret this right now is that if Fantom were to keep running like that, the model thinks it has a fair bit of room left in it to move to the upside, and then I would be personally getting concerned if it would just start getting back to those really high risk zones. That's where I think that any move that it's sustainably it's currently putting in is likely to be petering out at a certain point. So again, not financial advice, but just the way I'm thinking about this output. Now, the last thing I want to talk about in this video is we talk a lot about how it's useful to have these indicators for an individual asset to know, is right now potentially a historically good time to be acquiring the asset or to be getting out of that market, to be selling that asset. You know, what's the current risk reward ratio? But what's also, I think, very useful to have is these indicators for a variety of different assets so you can compare them. You can say, okay, if FTM is maybe a little bit hot right now, then are there other assets, maybe like HBAR or ADA or Algo, that seem to be offering maybe slightly more favorable risk-reward ratios? And the idea is that, you know, if you don't think that Fantom's going to be able to keep on putting in a move and realizing this upside potential, perhaps a better use of those funds would be in one of these lower risk assets that has quite a bit more room to move to the upside, and actually a ratio such that they have more upside potential than the downside potential. So again, none of that's to say that any of these projects are fundamentally better than the others. I'll leave that up to you to decide. And it's also not to say that Fantom can't keep putting in high gains or anything like that. It's just that when you have these indicators, it just helps you evaluate the crypto space and see where the risk rewards are most favorable. And then also, if Fantom were to put in a crazy move to the upside and really start pumping, what you could do is once it got up to these high risk zones, you could take profits out of Fantom and put it into one of these lower risk assets at that time. So imagine, let's say that the algo was still sitting down here below -1 after Fantom put in that move. Maybe moving those profits into something like algo, you could then ride the algo move that might come later and compound your profits. So again, not financial advice, form your own opinions, but those are just some things that we like to think about here on the channel. Alright, so that's all I wanted to talk about. So if you like the content, remember to subscribe to the channel, give the video a like, and give us a follow on Twitter. And remember, with UDPI, we're all going to make it.